Another day, another story of Bulls and Bears diaries. The COVID-19 pandemic was a global event that affected virtually every aspect of our lives, including the stock market. The pandemic led to a lot of uncertainty and fear, causing the stock market to experience a significant downturn in the first few months. However, it also presented unique opportunities for investors who were willing to do their research and take calculated risks. By using the COVID period as an example, we can all relate to the impact it had on the stock market and understand how it affected different companies in various sectors. It provides a relevant and relatable context that helps us understand how the stock market can behave during times of crisis and uncertainty. Additionally, using the COVID period as an example allows us to learn from the mistakes and successes of others who invested during that time. We can analyze the trends, see what companies thrived, and learn how to invest wisely in the future should we face a similar situation. In summary, the COVID period provides a unique and relatable context for learning about investing in the stock market during times of uncertainty, and it allows us to learn from the successes and failures of others. Here are some examples. If you had invested $1,000 USD in Zoom from February 2020 to September 2020, your investment would have grown significantly given the stock's performance during that period. On February 19, 2020, Zoom's stock price closed at $105.92 per share. If you had invested $1,000 at that time, you would have been able to purchase approximately 9.44 shares of Zoom. Over the next 7 months, Zoom's stock price grew substantially, reaching a high of $478.36 per share on October 19, 2020. If you had held your investment in Zoom throughout this period, your 9.44 shares would have grown in value to approximately $4,511.82, 9.44x $478.36, as of September 30, 2020. It's worth noting that stock market investments are subject to volatility, and past performance is not a guarantee of future returns. Additionally, this hypothetical scenario does not take into consideration any transaction fees or taxes that you might have incurred when buying or selling Zoom shares. However, based on Zoom's performance from February to September 2020, it's clear that the stock was a strong performer during that period and provided investors with significant returns. On the other hand, the travel industry was hit hard by the COVID-19 pandemic, and as a result, many traveling-related stocks suffered significant losses. With widespread travel restrictions and lockdowns imposed in many countries, airlines, cruise lines, and hotel companies experienced a sharp decline in demand for their services. As a result, the stock prices of many travel-related companies plummeted. For example, airline stocks like American Airlines, Delta Air Lines, and United Airlines saw their stock prices drop by over 50% between January and March 2020 as the pandemic took hold. Cruise line operators like Carnival Corporation and Royal Caribbean also experienced steep declines in their stock prices as their ships were forced to remain docked. Similarly, hotel and resort companies like Marriott International and Hilton Worldwide Holdings also saw their stock prices decline significantly as the pandemic caused a steep drop in travel demand. However, as the global vaccination effort picked up steam and travel restrictions began to ease, travel-related stocks staged a partial recovery in 2021. For example, as of September 2021, the stock prices of American Airlines and Delta Air Lines had rebounded by approximately 30 to 40% from their lows in March 2020, while cruise line operators like Carnival Corporation and Royal Caribbean had seen their stock prices recover by more than 100%. Overall, the COVID-19 pandemic had a significant impact on the travel industry and related stocks, causing sharp declines in stock prices in 2020, but with the rollout of vaccines, there's been some recovery in these stocks in recent months. Investment for me is a matter of logic and self-learning, plain and simple. It's important to note that no investment is guaranteed, and the stock market can be unpredictable. However, here are 5 companies that performed relatively well during the beginning of the COVID-19 pandemic. Amazon, AMZN. As the pandemic caused a surge in online shopping, Amazon's stock price increased by over 80% from February to September 2020. Netflix, NFLX. With many people stuck at home during the lockdown, streaming services like Netflix saw a boost in demand. Netflix's stock price increased by over 70% during the same period. Zoom Video Communications, ZM. As remote work and virtual meetings became the new norm, the video conferencing company, Zoom, saw its stock price increase by over 400%. Moderna, mRNA. As one of the leading companies in the race to develop a COVID-19 vaccine, Moderna's stock price increased by over 300% from February to September 2020. Microsoft, MSFT, as more people worked from home, Microsoft's suite of productivity software, including Microsoft Teams, saw increased demand. Microsoft's stock price increased by over 30% during the same time period. Again, it's important to note that past performance does not guarantee future results, and it's always wise to do thorough research and consult with a financial advisor before making any investment decisions. The companies mentioned above performed relatively well during the COVID-19 pandemic for a few reasons. Online shopping and e-commerce. Companies such as Amazon benefited from the surge in online shopping as people avoided physical stores to maintain social distancing. Remote work and virtual meetings. Companies such as Zoom and Microsoft benefited from the shift to remote work and virtual meetings, as people look for ways to communicate with colleagues and friends without leaving their homes. Streaming services. With movie theaters closed and people staying indoors, streaming services such as Netflix saw a boost in demand as people looked for entertainment at home. COVID-19 vaccine development. Companies such as Moderna were at the forefront of COVID-19 vaccine development and saw their stocks rise in anticipation of the successful development and distribution of a vaccine. Overall, the pandemic caused significant disruptions in many industries, but some companies were able to adapt and even thrive in the new environment. Thanks for watching. Don't forget to like and subscribe.